So you're doing November 2020, question number 3B. November 2020, question number 3B. All right. This is financial reporting question. Remember, this is a financial reporting class, eh? Yeah. But of course, it will be very, very helpful to students who are doing advanced financial reporting and the business data analytics as well. Very important. Group consolidation. Group consolidation. Great. So we shall have a very nice morning, ladies and gentlemen. Let's do this question together. So we are told here, the following are the draft statements of financial position of 𝗔𝗲𝗍 Limited and the 𝗡𝗲𝗍 Limited as at this date. All right. So they want us, ladies and gentlemen, to do what here too. I will straight away go to Roman 2. Roman 1, I never had the problem. No, Roman 1, you are done. But I'll repeat later on for purpose of balancing our statement of financial position. So they want us to give them the consolidated statement of financial position for the 𝗔𝗲𝗍 Group as at 30th April 2020. All right. So remember, we had drawn the group structure. The group structure is here. We are told on 1st May 2019, 𝗔𝗲𝗍 Limited acquired 80% of the share capital of 𝗡𝗲𝗲𝗱. So we have here, my good students, we have 𝗔𝗲𝗍. So 𝗔𝗲𝗍 acquired. So we have 𝗔𝗲𝗍 here. We have 𝗔𝗲𝗍 here. 𝗔𝗲𝗍, we are told, ladies and gentlemen, 𝗔𝗲𝗍 acquired 80% of 𝗡𝗲𝗲𝗱. 80% of 𝗡𝗲𝗲𝗱, and the date of acquisition is 1st of May 2019. 1st of May 2019. So 𝗔𝗲𝗍 acquired 𝗡𝗲𝗱. The date of acquisition there is 1st of May 2019. So of course, you'll be able to bear witness with me that 80% is way too high as a shareholding. It's more than 50%. And they haven't given us any information regarding, for example, ceding our controlling responsibility to any other person. Because at times the examiner will tell you that fine, you have got 80%, but you have chosen through, in this case here, for example, an annual general meeting, perhaps you, the investor with this controlling interest, happens to be very busy. You've chosen, in this case here, to give the powers of managing the company to someone else. If you give the powers of managing the company to someone else, that person who has been given the mandate to run the company is the one who will be called the controller. Because managing operations of a company, ladies and gentlemen, directing activities of a company, that is what we are told by IFRS 10 to be the control. But in this case here, there is no information like that. So this is more than 50%. And if it is more than 50%, so automatically 𝗡𝗲𝗱 becomes a sub. This 𝗔𝗲𝗍 becomes what here? Becomes our parent. So a parent and a subsidiary. A parent and a subsidiary. Now, ladies and gentlemen, we continue. We are told in this question so nicely, if you continue reading here, don't read about these numbers first. No, these numbers will require them later. There is some information here talking about CIDA. Look at this note number 4. On 1st May 2019, 𝗔𝗲𝗍 Limited also acquired an investment of 30% of the ordinary shares in CIDA Limited. Yeah, which cost? I don't want to know this as of now. What I want to know is that on this date, we acquired 30% of CIDA. So 𝗔𝗲𝗍 went ahead, ladies and gentlemen, to acquire 30% of CIDA. Yeah, so if it is 30% of CIDA acquired, so CIDA will be called what in my financial statements? Which type of investment is this? Yeah, because 30% falls in between this percentage, 20% all the way to 49.9999. So CIDA will be an associated company, yes. It will be an associate like that. Date of acquisition, we are told it's 1st of May 2019, like that. DOA stands for date of acquisition. Then go ahead and give us the date of any financial statements provided. The date of the financial, if this examiner has given you some financial statements, ladies and gentlemen, go ahead and read these ones. So we are told here we have some financial statements, these ones here. Yeah. So, and you can see here, we have both financial statements, which in this case here are dated 30th April 2020. 30th April 2020. 30th April 2020. So 30th April 2020. So I know that the financial year of this, financial year ending this, will start like the following day, which will be 1st of May last year. So it means that this, if you count in between, how many months do we have in between this date and this date, my good students? How many months do we have in between there? Yeah, there are 12 months. This is a whole year. This is a whole year. Thank you so much. This is a whole year. Thank you so much. And of course, the same is applicable on this other side. The date of financial statements is 30th May 2019. Again, 12 months. 12 months like that. 12 months like that. So then we have been able to do our group structure. We normally call this one here group structure. We normally call it the group structure. Once you have understood the group structure, now you should be able to go ahead and do what here? Lay down the pro forma, because this examiner has not told us to calculate goodwill. He has not told us to calculate net assets. He has not told us to calculate NCI. So I can go down, I can go and put down that consolidated statement of financial position like we had done last time. So please will allow me, because already you have that pro forma which you had drawn in our last class, you'll just allow me to get to workings and then we get to fill those things. Because already you guys have the pro forma. So it's about making changes to a few numbers here and there, like that. So, all right, ladies and gentlemen, yeah, we are doing November 2020, question number 3B from the FRA, a very good question. All right, so we start with this one here. So if it is workings for the balance sheet, workings for the statement of financial position, then we must begin with evaluating the net assets of our subsidiary. We evaluate net assets of our subsidiary. That should be the first thing that we should do. And if I remember very well, that is when I experienced a power blackout as I was doing the net assets of this subsidiary. So we normally do net assets of the subsidiary. So we have here net assets of the subsidiary at acquisition and at reporting. At acquisition, and then we have here at what here? At reporting. So you good students of mine, do you remember examples of net assets? Oh yeah. Do you remember examples? Remember, net assets are equity components. So the equity components, milikaku. Yeah. So we have in this case here share capital. So we have in this case here share capital. Remember, these are net assets of the subsidiary. Net assets of the subsidiary. So you come to your paper here. Net assets of our subsidiary. What are we told here? The equity components, remember. We start with the equity components. So ordinary share capital. Remember, the second one here is for the subsidiary. So then we have in this case here 3,000 what here? We have here 3,800. 3,800. What do you know about, ladies and gentlemen, share capital? Share capital never changes. If you have this to be the share capital of your subsidiary, it will be the same at acquisition and at reporting. So you shall have the same 3,800 here for the subsidiary, 3,800 there. Now, it remains constant years. Now, ladies and gentlemen, after that, we look for the share premium under the equity component. We look for the share premium under the equity component. So under the equity, no share premium. But we have, in this case here, a revaluation surplus. So revaluation surplus is form of what here? Is form of, so revaluation surplus. So revaluation surplus will not fluctuate. Revaluation surplus, ladies and gentlemen, can you kindly give me the figure to write here for revaluation surplus? Give me the figure to write here for revaluation surplus. Now you'll hear a ninja telling me, write 2,700. And yet 2,700 here is for the parent. Here we are looking at net assets of the subsidiary. It should be 200 and what here? 260. Yeah, it should be 260, 260 like that. 260 like that. Then we have retained earnings. So retained earnings, this one here will always fluctuate. Retained earnings, this one here will always fluctuate. Retained earnings, the retained earnings, you know, retained earnings, this is the same as retained profit. Retained profit. So the retained profit that we happen to be having, my good students, the retained profit that we happen to be having here, my good students, this one here, retained profit of 2350. Where do I write this 2350 retained profit? This 2350, is it at acquisition or at reporting? This 2350, will it be at acquisition or at reporting? Yeah, this is as per the date of the financial reports given. 2350 is as per reporting date. So 2350, ladies and gentlemen, this one, I'm bringing it here. We have it here, 2350 at reporting, like that. At acquisition, the examiner will give you. If it doesn't give you, we also know how to derive it. We know how to derive it. So we look at when we were acquiring this particular, subsidiary, did it have any retained profits with it? We are told here, on 1st May 2019, RB Limited acquired 80% of the share capital of Benta Limited. At this date, the retained profit of Benta Limited was 2200. Yeah, please leave the millions away. Why? Because our figures are in millions. So in this case here, we have 2200. We have 2200. So retained profits here, we have 2200, like that. Yeah, very, very important. Now, ladies and gentlemen, from there now we ask ourselves, do we have any fair value adjustments here? Do we have any revaluation gains which arose post-acquisition or on the acquisition date moving forward? Any fair value adjustments? Look for a note talking about fair value adjustments. Look for a note talking about fair value adjustments. So then what are we told, my good students, here regarding this fair value? Look at note number 2. On 1st May 2019, the fair value of Benta Limited net assets were equal to their carrying amounts, with the exception of some inventory, which had cost 193 million, but had a fair value of 233. So we are told that this fair value adjustment pertains to inventory. Inventory, in this case, ladies and gentlemen, that we can see had a fair value adjustment. The market value is 233, and it was costing 193. Yeah, these are fair value uplift. These are fair value uplift. These are fair value uplift. So Lisa is giving me 40 million, but now remember we write this as 40 because the figures are in millions. So then we have here 40 versus 40, like that. 40 versus 40. 40 versus 40. And then, of course, we'll have fair value adjustment, depreciation of the same, or reduction, loss in value. So if you continue reading this, just get information pertaining to this thing having gone down. So we are told, ladies and gentlemen, here that, on this particular date, 10% of these goods remained in inventory of Benta Limited. 10%. So 90% in this case here had gone. So to us, ladies and gentlemen, that will be a 90% reduction in value. 90% reduction in value. So you've got two ways to go about this. You can come and say that this fair value adjustment for inventory, at the beginning it was 40, and then at the end, the remaining is 10% of 40. 10% of 40 gives me 4, isn't it? 10% of 40 gives me 4. Or you come and pass a different journal. You pass a different journal. How do you pass this different journal? You will come and tell us fair value adjustment. In this case here, we have a 90% reduction. A 90% reduction because 10% is what is left with us. 10% is what is left with us. So the 90%, which is the same as 9.9 or 40, this will give us what, somebody here? 90% of 40 will give us what here, ladies and gentlemen? 0.9 of 40 will give me 36. Remember, these reductions, you can't record them here. You can't record them here. These reductions, you can only record them here. So you come and subtract this 36, and you can see the net effect will leave you with a 4. The net effect here will leave you there with what here? With a 4 there. With a 4, the net effect for the inventory. I think this is the better approach. So go ahead and give me the total net assets. Give me the total net assets. Give me the total net assets. Please give me the total net assets. Please add here. 3,800 plus 260 plus 2,200 plus 40 plus 0. Of course, dash is 0. Yeah, so this gives me 6,300. This lady called Millie, very, very aggressive. She's always vivacious, full of life, very active, very good. Yeah, so in this case here at reporting, we have here this plus this plus this plus this minus 36. Minus 36, Maalim, thank you very much. 6374. Thank you so much. 6374. So remember, once you get these net assets, always go ahead and give us post-acquisition profit. Post-acquisition profit. So the post-acquisition profit is what we call the PAP, which represents the increase in net assets, which will be 6374 minus 6300, which gives us what figure, my good students here? 6414. They're saying it's 6414. David says 6414. 6414. 6414. Please check. Please check. Please check. I don't know who is right. Please check. 6414, right? So 6414. 6414 here. 6414. 6414. So 6414 minus 6300. This one here will end up giving us a what figure, ladies and gentlemen? 114. So once we get this 114, it's a post-acquisition reserve. Go ahead and share it with the owners of the subsidiary. The subsidiary has got two owners. We have the parent, who is 𝗔𝗊, who has 90%. Go ahead and share this. So shared as follows. So we have here 90% to 𝗔𝗊, the parent known as 𝗔𝗊. So not 90, it's 80%. Remember from the group structure. From the group structure, 𝗔𝗊, parent only has 80%. Two decimal places, 80% of 114 gives me what figure? 80% of 114 gives me what figure? 80% of 114, that gives me 91.2. 91.2. Remember the other owner of this subsidiary. You know, we have got two owners. We have got two owners. We have 𝗔𝗊, the parent, who has 80%, and then we have another smaller ninja, minority ninja, known as who? NCI. 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 Not SEDA. SEDA is very different. So many guys confused. Thank you for bringing up that. NCI. So remember, this parent is the controller. And then now we have the non-controlling. The non-controlling has 20%, and this non-controlling, we are calling them NCI. So 20% of 114, two decimal places, will give me what figure? 22.8. 22.8. 22.8, like that. And once you finish this working, if you are a person who wants to do these workings, then you have finished the entire question. This is the most difficult working. This working. The moment you have it right, then you are finished. Now, ladies and gentlemen, after having established how these net assets of the subsidiary are, the net worth of the subsidiary, then what do you think will be the next step for us? What do you think will be the next step for us? What do you think will be the next working for us if you are a working person? Having finished with net assets of the subsidiary, what do you think will be the next working for us? Goodwill. Thank you so much, 𝘆ecie. Goodwill. Thank you so much, 𝘆ecie. Goodwill. So come here and give us goodwill. I'm rubbing this, but I really hope that you great students will be able to remember the net assets at acquisition for goodwill computation. So you'll be able to remember this. So go ahead and give us goodwill. How do we get goodwill is the easiest. In your exam, this is what I expect you to always remember for goodwill. This is what you shall always do. So for goodwill, remember the pro forma. So you come and give us consideration paid by who? Paid by parent. All your questions, consideration paid by the parent, there will be cash and there will be deferred consideration. Deferred consideration. Nowadays, you must be given this concept of deferred consideration. For the advanced level students, most of the times, even financial reporting students, it is still there, but not as in the advanced level. Advanced level here, they can't give you cash. Advanced level nowadays, if you look at the trend of the exam in advanced level, here they will give you share exchange, that the parent gave out shares. Yeah, it's given on the financial statements. I think there is a question up here. Let me first of all look at the question, ladies and gentlemen. How we got this retained earnings of 2350? Yeah, it's given. 2350, it's given. Note number one. We're told here that when we were acquiring here, not note one actually, retained profit 2350 at the end. At the end here. Yeah, sorry for that. Perhaps I moved a bit fast. Okay. So we have here cash. So we have this one. We have like that. And then now remember, we are doing what we call full goodwill. So full goodwill, if the parent has 80%, there must be another owner known as a 𝘆ci. So consideration paid by 𝘆ci. You come and do like that. So you have here total consideration. Yeah. And then you less what here? You less net assets of the sub at acquisition. Never forget these free marks here. Like that, you subtract, you get goodwill. Goodwill at acquisition, of which you'll be able to impair. Yeah, impairment loss. So we have here impairment loss. So this impairment loss is what you subtract like that, and then you'll be able to get what we call goodwill at reporting. Goodwill at reporting. So once you finish writing this pro forma, are you able to give me a thumbs up like this? Or you simply say why? You simply say why for yes. Once you finish writing this, you simply say why for yes. And you students are not very, very good students, or are not very, very good friends of your classmates. How do you expect your classmates really to be outside this classroom? I'm so sure most of those colleagues of yours do not read their WhatsApp messages. I'm 100% sure. They take time before they get into WhatsApp. So if I were you, I would have SMS'd my friend, this class has begun. All right? Because this class should be having more than 200 students. Not 90, not 100, no. Not 100, should be having more than 200 students. All right. So ladies and gentlemen then, yeah, thank you so much. So let's get this information. So we are told here, on 1st May 2019, 𝗔𝗍 Limited acquired 80% of the share capital of 𝗏𝗲 Limited. At this date, the retained profit of 𝗏𝗲 Limited was this, and the revaluation surplus stood at 260. Yeah, this is revaluation surplus of 260. Great. 𝗔𝗍 Limited paid an initial cash consideration of 5940 or 5940. So cash consideration is 5940. So 𝗔𝗍, for the 80%, 𝗔𝗍, I will take a shortcut. So 𝗔𝗍, this cash consideration is 5970. Is it 5970 or 5940? 5940, yes. Like that, yes. 5940. It never stopped there. Remember, these figures are in millions, eh? Don't forget that these figures are in millions. 59,730. 59 or 5940. 5940. How did I read this? 5940, you're right. 5940, you're right. 5940, you're right. Yeah, 5940. 5940 is the cash consideration, cash paid for the 80%. It never stopped there. They went ahead and made a promise. So we are told here, yeah, the accountant of 𝗔𝗍, and agreed to pay the owners of 𝗏𝗲 Limited a further 1,800 million on 1st May 2021. 1st May 2021. So 1st May 2021, how many years are this from 1st May 2019? How many years are this? Those are 2 years, isn't it? So they made a promise to pay this 1,800 2 years from today. So meaning that this is deferred future consideration. So this deferred consideration must be discounted. But fortunately, they gave us the cost of capital and they went ahead to give us the discounting factor. They went ahead to give us the discounting factor. So meaning that this 1800 will be multiplied for the deferred. So you take the discounting factor, you multiply like that. But if they don't give you these discounting factors, we are finance students. We know how to get discounting factors. To get discounting factor, we use 1 plus r raised to negative n. I've written 1 plus r raised to negative n like that. That's how we get our discounting factor. So like now in this case here, I would have taken 1 plus 0.08 because you see our cost of capital is 8% raised to negative 2. Can somebody give me this figure? What is 1.08 raised to negative 2? Can somebody give me this figure? What is 1.08 raised to negative 2? 1.08 raised to negative 2. Discounting factor. Discounting factor. I just want to get this discounting factor first. Yeah, it is 0.85. It will be this figure here. Yeah. Alternatively, for this deferred consideration, you can come and use this formula. You simply take 1800. You take this 1800, you divide it by 1 plus r raised to 2, if you wish, when it is the denominator. When this is in the denominator, you take this as positive. So there are so many ways you can do with this. You can do this out. So very good. So come here and give me an answer. So what is 1800 times 0.857? 1800 times, thank you so much. They'll pay after 2 years. Yes, thank you, Mary. They will pay in 2021. And remember, we bought this in 2019. So this gives me 1542.6. Thank you very much. 1542.6. Great. Now we skip and go to the consideration paid by NCI for their 20%. So for their 20%, these ninjas called non-controlling interests did pay us how much? Did pay how much for acquiring the subsidiary? Yeah, you'll be able to see here, AB Limited has a policy of valuing non-controlling interest at fair value on 1st May 2019 on acquisition. The non-controlling interest in Benta Limited had a fair value of 1317, of 1317, 1317, 1317. So here we have 1317 like that. So is there somebody who can come and give me the total consideration? You take this plus this plus this. Give me the total consideration here. Give me the total consideration over here. Give me the total consideration over here. What do we have, my good students, over here? 8799.6. 8799.6. 8799.6. And is there somebody who is able to remember the net assets of this subsidiary at acquisition? Anybody who is able to remember from that table, net assets of this subsidiary at acquisition? 6300. 6300. So you subtract, you'll be able to give me the goodwill at acquisition. You'll be able to give me goodwill at acquisition. You'll be able to give me goodwill at acquisition. So goodwill at acquisition. So this and this, you subtract. So according to Maureen, we are getting, according to Jules, 2499.6. So we have here 2499.6 like that. And then now you look for the impairment loss. Goodwill is an asset. It is a subject of value reduction. And the value reduction of goodwill, we call it what here? Impairment. So the impairment loss, what do we have here in this case here for the impairment loss? What do we have here for the impairment loss? So impairment loss, they're telling us, impairment test carried out on 30th April concluded that the value of the investment in Cedar Limited was impaired by 85 million, while the consolidated goodwill was impaired by 100 million. So goodwill impairment loss is 100. Goodwill impairment loss is 100. So you come and subtract this. So this minus this 100 gives us goodwill at reporting. So are you able to give us this goodwill at reporting? Are you able to give us this goodwill at reporting? So good, it is 2399, 2399, 2399.6. So can you kindly do me a favor? Do you remember our format balance sheet, the one that you done last time? I would want you to go there, besides goodwill, you write this figure. If you have that balance, if you were in that last class, Remember, we have a format. We had already drawn a format, and I told you why you should always start with that format, because there are easy marks, low-hanging marks to be harvested there. So is there somebody who has been able to position this goodwill in their consolidated statement of financial position? Nobody has done that. Nobody remembers that. At least there is 𝗀𝗃𝗟𝗕. Thank you so much. Yeah, great. Grace Paul. Also Grace Paul, in this case, you're a very active student. Yeah, very active. Thank you so much. Ladies and gentlemen, if I'm following these concepts over these basic steps, what do you think in this case here should be my next working? My next working here straight away should be, ladies and gentlemen, the non-controlling interest. Do non-controlling interest. Investment in associates, that one, Lisa, I did that one. I don't want to repeat it. Not unless you insist, I don't want to repeat it. So here straight away, my good students, I would want to know, I've known the value of the subsidiary. I've known this very important asset called goodwill. So I would want to know these other smaller ninjas we are calling NCI, how much are they worth at reporting? I know their value at acquisition. I know their value at acquisition. I know their value at acquisition, but I would want to know their value at reporting. Their value at reporting. So these ninjas, we call them ninjas, young ninjas, young ninjas. So we come here, we know their share is 20%. We know their share is 20%. So then come here, I will repeat that, no worries, I will repeat, but allow me to just finish NCI, because already this is on top of my mind. So NCI, we have NCI at acquisition. NCI at acquisition. Do you remember this figure? It's given. You have used it in calculations of the goodwill. NCI at acquisition, the figure that you used for NCI in goodwill computation, 1317. Lisa, 1317. Thank you so much. Now, once we have gotten this NCI at acquisition, let's give them their flowers. Let's give them their flowers. They have been part and parcel of this business. So post-acquisition, we give them share of PAP. So come here and add NCI's share of PAP, share of post-acquisition profit. And do you remember this figure? Do you remember this figure? Grace Paul has already given me this figure. From the net assets, we did the sharing. So we give them, so we have here 22.8. So as we give them their flowers, anytime we have got any dipping, any beatings in the business, they also take their fair share of losses. So are there losses in this case here that we are supposed, ladies and gentlemen, in this case here to surcharge these people? Remember, they are partakers of our assets. There is an asset. I want to hear from you. Yeah, you know, it can't be just you taking fruits, flowers. There is something in this case here that we had a beating. Yeah, the goodwill impaired. The goodwill impaired, they have to be a partaker here. So in this case here, you share less share of loss, or the impairment loss. Share of impairment loss. Impairment loss. And remember, this impairment we're giving them is goodwill. These people are not party to the associate. Don't give them impairment loss in an associate. It's impairment loss in goodwill. What was the goodwill's impairment loss? Is there somebody who is able to remember the goodwill's impairment loss? It was 100, isn't it? But remember, 100 is for the group. Now we are taking their percentage. What is their percentage? Yeah, so we have in this case here 20%. So we shall only be able to slap them with a penalty of 20%, and that is it. Go ahead and give me NCI at reporting, the one that I should be able to take to my consolidated statement of financial position. So NCI at reporting. So NCI at reporting. So the NCI at reporting, what figure do we have here now? NCI at reporting, what figure do we have here, ladies and gentlemen? 1319.8. 1319.8, like that. 1319.8. Thank you so much. Thank you so much. Now, my good students, I would want straight away to just connect this NCI with that working, which I normally tell you not to compute. In an exam, that working that I normally tell you to take as a balancing figure. Do you remember that working, which I normally tell you is among the worst? You should never do it. Do you remember that working? Group retained earnings. Yeah, so let's do group retained earnings. So I hope this will be the last time we are doing it in class, because on a low-hanging fruits, we don't want to do things that are just hot air. No. So group retained earnings. Let's just connect this. I'll be able to do the investment in associate later. Let me just connect this with group retained earnings. Group retained earnings. Group retained earnings. So group retained earnings. So group retained earnings, remember, you start with the parents' retained earnings. Parents' retained earnings. So we have here parents' retained earnings. Remember, the parent is 𝗔𝗊. So go to the balance sheet of 𝗔𝗊 and pick the retained earnings of the group of the parent first. All right, so here we are. Ladies and gentlemen, if you look at this very, very well, you'll be able to see retained earnings of 𝗔𝗊. Are you able to see the retained earnings of 𝗔𝗊 somewhere? 13 what year? Now, they're not talking to me. These ninjas are not talking to me. 13,600, isn't it? So we have here 13,600. Thank you so much. Thank you so much. So 13,600. So remember, this one here, we take it 100% because the parent is a member of the group fully, is a full member of the group. Yeah. And then now we come and take share of the subsidiaries POP. Okay. So we have here share of post-acquisition POP. Post-acquisition profit, I mean. Remember the 80%, we had already done this. We had already done this, 80% of the increase in net assets. You had already done this. Yeah. Somebody should be able to help. Thank you so much, Millie. Wait, they're not able to. 91.2. Are they able to remember this figure of 91.2? 91.2. Thank you so much. Remember this one you were adding, isn't it? It's positive, it's profit. Thank you so much. Now, from there, ladies and gentlemen, we come and consider beatings. Beatings associated to the acquisition, post-acquisition. So do we have any beatings? Yes. Post-acquisition, we acquired goodwill. And the goodwill, in this case here, got impaired. That injury, we have to take a beating for it. Yeah. So in this case here, share of impairment loss. Share of impairment loss. Thank you so much. It is 80%, 80%, 80%, 80%, 80% of that 100. Thank you so much. 80% of that 100, which will end up giving me what figure? 80% of that 100, which will end up giving us what figure? 80% of 100. $80. Thank you so much. It's a loss. It's a loss. Can you kindly tell me any other injury that we got? Any other injury that we got as a result of being members of the group here? Yeah, we have in this case here an associate that was also injured along the way. Yeah, that's a group injury. So group injury. So we have here impairment loss, goodwill. Yeah, and then we have in this case here impairment loss. Remember, impairment loss of the associate, you don't apportion. You don't talk of share. So impairment loss of associate. We don't share this. This is CIDA. This is CIDA. Impairment loss of associate CIDA. Do we have that figure? Oh, yes, we do. We have the figure. Impairment loss of the associate. We don't share that one. That is our full loss, because you only review impairment of our portion of the subsidiary, So that automatically, ladies and gentlemen, in this case here, that becomes what here? That becomes, so we have it here, impairment loss, which is 85, 85. So I hope that one they're able to see very well. They're able to see this very well. Now, this reminds me that we forgot something, but there's no problem. So 85, you know, we are taking this loss, but you must also take, I should have added here, share of PAP from Benta, the subsidiary, and then share of PAP from the associate. Let's just put it here. There's no harm. So we have here share of PAP, associate, share of PAP from the associate, because the associate is, a group member and it generated some profits. Yeah, so this is normally very, very easy. Is there somebody who is able to see how much profit the associate made? Anybody who is able to see the profit that the associate made? Anybody who is able to see? Thank you so much, Millie. You are doing a good job. Great, great, great. So this associate called 𝗔𝗃 generated some money. Yeah, so if you go to 𝗔𝗃, you'll be able to see that 𝗔𝗃 generated some money. We are told here on 1st May 2019, 𝗔𝗃 Limited also acquired an investment of 30% of the ordinary shares in 𝗔𝗃 Limited, which cost shillings what year? Which cost shillings 380 million. 𝗔𝗃 Limited reported a profit of 850 million during the year. You can see we reported a profit of what year? A profit of 850 million. Not a problem. Not a problem. So please listen and listen to me very well. This profit is generated. Remember, our percentage is 30%. And then, of course, we must do what we call time proration. We must do time proration. But remember, we stayed with 𝗔𝗃 for how many months? We stayed with 𝗔𝗃 for 12 months, a whole year. A whole year. So just for your revision, this must always be time apportioned. But we stayed with 𝗔𝗃 for a whole year in the financial year. Yeah. So share of PAP, this associate. So this will give us what figure, ladies and gentlemen? Wait, they are not talking to me. Now they are not talking to me at all. Now they are not talking to me at all. 255, isn't it? 255, thank you very much. Is there any other thing you think should be able to come here? Yeah, great, great. I can see something else. I can see some beating here. Remember, this time round, the group is the one that sold goods to the subsidiary. This time round, we have a downstream. So UPS downstream. So we have here UPS downstream. Downstream. Remember, it's group retained earnings. If it was upstream, then I would not have brought that working here. I would not have brought UPS here. I would have taken UPS straight away, ladies and gentlemen, to what here? Yeah, I would not have brought it here totally. Totally. All right. So UPS downstream, then this automatically here. Let's read first of all this one on the UPS. Let's read this one on the UPS. All right. So, ladies and gentlemen, what do we have here? We are told here, somewhere here. No. There is a place they have told us about during the year. Yes, not number 3. During the year, 𝗔𝗃 Limited sold goods worth 515 million to Benta Limited at a profit markup of 25% above cost. So they've given us markup. At 30th April 2020, Benta Limited held 75 million of these goods. So who sold to who? It's 𝗔𝗃 who sold to Benta. 𝗔𝗃 sold to Benta. So in this case, it is the group that made fake profits. It's the parent that made fake profits. So it is downstream. So if it's downstream, then the parent make fake profits that we need to eliminate from here. Yeah. What if it is the subsidiary that sold to the parent? Then that will not have come to the group because this is the subsidiary now which made what year? Losses. That would have gone straight away to the net assets of the subsidiary. All right. So then come right away here. Is there somebody who can calculate that for me? Is there somebody who can calculate that UPS for me, ladies and gentlemen? Anybody who could easily calculate this for me? Anybody who could easily calculate this for me? Maybe I should share the question. I should put up the question to see whether there is anybody who will be able to get this answer. Somebody give me this answer. Somebody give me this answer. Great. Great. Because you must be able to remember the formula. The formula. We must be able to remember the formula. We must be able to remember the formula. We must be able to remember the formula. So you must be able to remember the formula. Great, great. Thank you so much. You guys are really nice. You guys are hardworking. You students of mine are hardworking, yes. Very hardworking, yes. Very hardworking, yes. Because anytime they want us to get UPS, ladies and gentlemen, we normally take profit margin, Margin times remaining intra-sales. Anytime they want us to get UPS and realized profits on stock, we normally take profit margin times remaining intra-sales. This ninja has given me profit markup. They have told me the profit markup is 25/100. So then the profit margin has always a bigger base. It will be 25/100, and then you add this 25. You add this denominator there. So it will be 25/125 because you want margin here. 25/125. And if that is the case, then the UPS will be the margin which is 25/125 times the remaining intra-sales, the remaining internal sales, which this examiner has told us, ladies and gentlemen, that was left here, remaining intra-sales. So the remaining intra-sales, we are told out of this, note number 3, out of all these goods, Benta Limited still held 75 million of these goods in its inventory. So in this case here, times 75, like that, which in this case here will give us 15. So is there any other thing? Remember, it's fake profit, you deduct. It's fake profit because remember, these stocks, according to IS number 2, stocks, you're not supposed to be having profits inside them. So it's a fake profit we are deducting. Now let me ask you a question, and that is why I don't love this group retained earnings. Nobody loves this group retained earnings working because it doesn't carry any marks. All this is just nonsense. If you go straight away to the question, do group retained earnings as a balancing figure, you'll get all the marks if it is correct. If it's correct. Is there any other injury that you think in this case here may not have been factored in for the parent? The parent may have engaged. There are so many hidden things here. Remember the parent. Yeah, let me see your comments here. Any other, because you must keep on thinking really. Yeah. Any other engagement that you think the parent entered into? Yeah. Where it received a beating, which has not been factored in the... Yes. The parent in this case here took a loan. Remember the deferred consideration. So come and give me the interest on the deferred loan. Interest. Yeah. Thank you very much, Millie. So interest on deferred consideration. Remember, this is a loan. It's like a loan. You make a promise, it's a loan. So are you able to remember the interest rate, the rate of interest? Has it been provided in the question? The interest rate, has it been provided in the question? Interest rate, has it been provided in the question? It is normally the cost of capital. The interest rate is the cost of capital. It is 8%. Do we remember the deferred consideration in the form of present value? Deferred consideration, the one we discounted. Do you remember that figure? Oh, yeah. Deferred consideration of the one we discounted. 1542.6. If you remember this. 0.6. Remember, it's a 2-year loan. But here we are accounting for 1 financial year. And fortunately, we stayed with this promise for the whole year. Remember, we stayed with this subsidiary for the whole year. Yeah. So kindly give me this figure, if possible, in 2 decimal places. In 2 decimal places. Remember, this is 8% per annum. Had we stayed with the subsidiary for 9 months, I would have time apportioned. Please, for your revision, write here times 12 over 12 for your revision. And then when you go to next year again, you do the same. So I'm being given 123.41. I'm being given a figure of 123.41. 123.41. 123.41. 123.41. 123.41. So the interest, this interest, you have to be very, very careful. Let's just come and read it here. The interest. You must be very, very careful. The interest, what have they told us there about this interest? They have told us here, 𝗔𝗡 Limited has a cost of capital of 8% and the appropriate discount. Yeah, that's very good. That's very, very good. Very, very good. So, ladies and gentlemen, from there, then, we expect you to come. And I don't think there is anything we have left out, really. I don't think there is anything we have left out. So come and give me the group retained earnings. This is supposed to be deduction because it's an interest, it's a loan interest. So group retained earnings. So is there any student who will be able to do this working in their exam? Any student who is planning to do this working in their exam? No. No. You don't have a luxury of time. Don't do it. Don't do it. It'll waste your time. It'll waste your time. So then give me this answer here. Give me this answer here. Just give me this answer here. So somebody is giving me a figure of 13. Somebody is giving me a figure of 13. 642. 642.79. 642.79. That is the deferred, or rather the group retained earnings. The last working for us, ladies and gentlemen, before I look at the investment in the associate, is the deferred consideration itself. The last working. I hope you have taken this to your statement of financial position. Take this figure, put it there. Take this figure, put it there. The last working for us, my good students, is the deferred consideration itself. The deferred consideration itself. That is our last working. So our last working, ladies and gentlemen, is the deferred consideration itself. The deferred consideration itself. Deferred consideration. So deferred consideration. So deferred consideration, what do we have here? We have deferred consideration on acquisition. The present value, which you have just given me. Deferred consideration, the present value that you have just given me up there. The one you have given me up there, the deferred consideration on acquisition or at acquisition after discounting was coming to how much? It was coming to 1542.6. And then, of course, you add the interest for the year, which will be 8% times this 1542.6, like that. 8% times 1542.6. If there was some, I would have done, but just for your revision, you can write it times 12 for 12. This is normally a very easy working. These are very easy working. Here in a diambo. Here in a makosa, in a diambo. So this gives me 123.41. So please go ahead and give me the deferred consideration at reporting. Deferred consideration at reporting. At reporting, add the two. Add the two. How much do we have? Add the two. How much do we have? Because remember, this interest also by the end of the year will not have been paid. The interest by the end of the year will not have been paid. It becomes a liability. It becomes a liability. it becomes a liability. It becomes a liability. So how much do we have there, my good students? We're almost finishing. In less than 10 minutes, we'll be out of this place, please. I would want to go with this question to the very end. 1666.01. 1666.01. Thank you so much. Now we have finished this. Now we can do what you guys requested, the investment in the associate. You told me to do investment in the associate. Investment in associate is really easy. Investment in associate is really easy. So come and give us there. Investment in associate. Investment in associate. Yeah, CIDA. So go straight away to your question here. They have told you something to do with CIDA. They have told you something to do with CIDA. Yeah, something to do with CIDA. Yeah, they've told you something to do with CIDA. Get that information on CIDA and you will be done. Get that information on CIDA and you will be done. You'll be done. Now, ladies and gentlemen, come straight away here and see the information on CIDA. Are you able to see information on CIDA? Yeah, here. No. Here. On 1st May 2019, 𝗔𝗲𝗍 Limited also acquired an investment of 30% of the ordinary shares in CIDA Limited for this amount. So remember, this 30%, that gives us associate status. So investment in associate called CIDA, very easy. You take the original cost of interest in CIDA. We are told is 380. 380. And then you add share of profits. You add groups. Share of profits PAP for CIDA. Remember, CIDA is the one they told us, yeah, 30%, is the one they told us made a profit of how much? This CIDA. In the whole year, I think it made a profit of 850. HP has already given me a figure. It is 2. Actually, we already have this figure somewhere. 255 years. 255. And then very, very easy, you'll be able to come here and less any impairment loss. Impairment loss in CIDA, which you have also been given. Are you able to remember the impairment loss? And if it pays dividends, you subtract also dividends paid by associate here. So 85. So you subtract like that. So then these will be the investment in associate, investment in associate, investment in associate at reporting. At reporting, so this will be 380 plus 255 minus 85, which gives us 500 what here? 550. 550. So are you going to give me those 10 minutes? I just finished the whole balance sheet very fast because I'm just copying, because now we have everything. I'm just going to copy down. Are you able to give me the 10 minutes? Yeah, thank you very much. Just 10 minutes only. Now we have everything. Mine is to ask you for figures. I copy down. I copy down. All right, ladies and gentlemen. So those students who asked for this working, have they been able to write it down? Can I rub this? Can I rub this? Can I rub this now? Can I rub this now? Yeah, thank you very much. Thank you very much. Thank you very much. So then we write there, the name of the group is 𝗔𝗲 group. You call a group by the name of the parent. So we have here 𝗔𝗲 group. Yeah, consolidated statement of financial position as at. I'm so sure you guys can write that even much better than me. That one, I'm so sure you guys are very, very good. I've never seen the number of years I've marked these papers. I've never seen any student not writing the dates. That information on top there. You guys normally shine on that quite a lot. But unfortunately, some guys will write it nicely up there, and then underneath, there is nothing. Nothing. But we shall overcome. So we start with group assets. Of course, the first assets here we have, there will be what here? There will be non-current assets here. And the non-current assets, what do we have, my good students? And the non-current assets, what do we have there, my good students? Non-current assets. Non-current assets. High school, yes, with a mark. Yeah. So non-current assets. So non-current assets, so we start with Property, plant, and equipment. So property, plant, and equipment, please pick the figures. Pick the figures, now we have them. So now we have everything very easy, easy peasy. So it is 25,290 plus what here? Plus 54,20. 25,290 plus 54,20. So remember, there is nowhere they are telling us that we had any fair value adjustment for the PPE. No movement of PPE items between group members, nothing. Give me the figure here. Give me the figure there. I mean, these are free things, and that's why I love students starting with this pro forma, because you'll be able to get so many marks without even writing anything. So I'm being told this is 3710. Thank you very much. This is in shillings millions. Yeah. What other forms of non-current assets do we have? We have goodwill. We have investment in associate. So please give me the goodwill figure. Give me the goodwill figure. We have goodwill. Somebody who has those figures to give us the figures we write. So goodwill. So we have here 2399, 2399.6. Then we have investment in CEDA, investment in CEDA, 550, isn't it? Then you go straight away, ladies and gentlemen, to current assets. So we have our current assets, of which the first one is inventory. The first one is inventory. For inventory, this was a tricky one. Inventory, you have to be very, very careful. So you see this inventory, we have 2750 for the group, for the parent. So we have here 2750 plus we have 1295. What else should I be able to bring here, my good students? What else should I be able to bring here? What else should I be able to bring here? What else should I be able to bring here? Yeah, UPS. Thank you so much. So we have UPS. Thank you so much. UPS over how much? UPS over how much? UPS over how much? Because you know that is fake profit. Fake profit must be deducted here. Fake profit. Apart from UPS, is there somebody who is able to think of something different? Somebody who is able to think of something a little bit different? Because there was a fair value uplift for stocks. There was a fair value uplift for inventory, and it was 40, and this 40 never survived for the whole period. It was also reduced by 36. You can simply come and add 4 years. You can add 4 million years. You can add 4 there. There was a fair value uplift in the period. There was a fair value uplift of 4, or 40 minus 36, if you remember, from your net assets. So could you kindly give me the figure for inventory? The correct figure for inventory. How much do we have here? The correct figure for inventory. How much do we have there? The correct figure for inventory. How much do we have there? 2750 plus 1295 minus 15 plus 40 minus 36. 3994. 3994. Is that okay for everybody? I can see Joseph getting 4043. Whose story do I believe now? Whose story do I believe? 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 4043, eh? 4043. Yeah, just get your calculator very well. So we have 2750 plus 1295. Yeah. Plus, in this case here, that 4. Yeah. 4043. 4043. 4043. Most of them are saying 4043. Now, ladies and gentlemen, from there, we go to the next one, the next current asset. If you look at this very well, what is the next current asset? The next current asset, ladies and gentlemen, here is called trade receivables. Receivables. I love this kind of a question. Yeah, the examiner wants us to get 3 marks, 2135 plus 1010. If we had any internal owing, we would have subtracted. Yeah, there are no internal owings. I'm simply supposed to combine those two. There is nowhere we are told by the end of the period, Abby owed Benta this amount. Nothing. Or Benta owed. Nothing. Nothing. No information of that sort. All right. or 4034? I'm not sure. 4034, thank you so much. How about this receivable? How about the receivable? Thank you so much. 3145. 3145. After receivable, we have the next one, which will be cash and the bank balances. Next one, which will be cash and the bank balances. So we have here cash and bank balances. So we have cash and the bank balances. Easy. So cash and bank, how much do we have there? 1220 plus 1220 plus 575. So 1220 plus 575, this will give me how much as cash balances. So they're giving me a figure of 17 something, 1795. They're giving me a figure of 1795. Let me ask you a great question that will give you 1 mark. What if I had some cash in transit? What if I am told that this company had paid, but the cash is on the way coming? What would have I done? Yeah, I would have either added here or introduced something here called cash in transit. Cash in transit. The better approach is to introduce something here called cash in transit, because I tend to see the examiner giving it a special mark. Yeah, so in this case here, that is it. So then go ahead and give us, my good students, give us our total assets. Go ahead and give us our total assets from the top. Give us our total assets from the top. From the top, just add everything. Add everything. Give us the total assets, and then you double underline. Give us total assets from the very beginning, and then you double underline. Yeah, so according to 𝗲𝗂𝗃, it's 42,633. 42,633. 42,633.6. Like that. 42,633. I will wait to hear from the other students. I'll wait to hear from the other students. I will wait to hear from the other students. Yeah, somebody called Vinny has been able to confirm. Thank you very much. Now, from there, we are not thieves in the industry. We want to show how this has been financed, isn't it? Let's show how this has been financed. So financing, we are looking at equity and liabilities. So we start with equity. So please, because of the size of my board, I'm going to rub mine. But you guys are continuing here with equity. Simply write equity. Equity, of which equity we shall start with what here? Equity, we shall start with so we have equity, we start with share capital. So are you able to see, first of all, you know the principle of share capital. Share capital free mark. We normally take which one here for share capital? For the parent only. So share capital, we take for the parent only. So parent only, what do we have here? Abracadabra. Parent only, what do we have here? Abracadabra. So parent only, ladies and gentlemen, the share capital of the parent only is 12 what here, ladies and gentlemen? Yeah, it is 12,500. 12,500. 12,500. From there, under equity, I can see straight away revaluation surplus. So revaluation surplus, don't add the two. Revaluation surplus, you take the one of the parent only. If you had added that, you remove one of them. So the parent only, yeah, it's a reserve. It's a reserve, 2,700. The only reserve that needs the working under equity, actually there are two of them, is this retained earnings. So retained earnings, ladies and gentlemen, what do we have under retained earnings? Fortunately, we have that figure. Fortunately, we have that figure. Fortunately, we have that figure. Fortunately, we have that figure of retained profit. Some ninja must be having that figure. Hello, ninja. So what do we have here? Yeah, 13,642.79. So 13,642.79. Then there is another equity component, source of permanent capital, that so many students will forget to put here. Because those non-controlling interests, they have given you money and they're not coming to demand that money from you. If they want, they can sell their shares at the stock exchange. So we have NCI. So NCI. And are you able to remember this figure of NCI? Are you able to remember this figure of a non-controlling interest, my good students? Abracadabra. Are you able to remember this figure of NCI? Abracadabra. How much do we have there? We are working at reporting. I'm being given a figure of 1319.8. So we have here 1319.8. From there now we got the liabilities. And remember, liabilities, you shall always start with non-current liabilities. Always, you shall start with non-current liabilities. Non-current liabilities. So non-current liabilities, I'm able to see in the question. Remember, you are following the question paper the way it is, the financial statements given. The first one here, under non-current liabilities, we have deferred consideration. So deferred consideration. Already we have the figure. We have the figure on reporting, the deferred consideration, the one that had interest in it. The one that had interest in it. So deferred consideration, how much do I write here, ladies and gentlemen, for deferred consideration? Already we have that figure, ladies and gentlemen. Already we have that figure, ladies and gentlemen. For deferred consideration, how much do we write here? 1666.01. So 1666.01. Apart from this deferred consideration, I'm following everything the examiner has given me. So apart from this deferred consideration, I can see we have 10% debentures. Very easy, easy peasy. 10% debentures. So 10% debentures, I will take the figure of the parent plus the figure of the subsidiary. 2450 plus 500, which gives me 2950. 2950 if I'm not wrong. 2950. 2950 if I'm not wrong. 2950 if I'm not wrong. But I expect to get those answers from you. I'm an old man. I'm an old man. I could be wrong. I'm not a Gen Z. Gen Zs are the ones who can't be wrong. Then we have deferred tax. This is normally a free mark. So we have deferred tax. So we have deferred tax. Deferred tax, what do we have here under deferred tax? We have 1920, the year that I was born. 1920 plus 375, which gives me how much? 1920 plus 375, that gives me how much? 2295. 2295. 2295. So we are doing very well. We are through with that. And current liabilities. Now we go to the current ones. So current liabilities. So current liabilities. So under current liabilities, and gentlemen, what do we have here under current liabilities? Under current liabilities, I can see we have payables and tax. So we have payables and tax. So payables, ladies and gentlemen, what do we have there under payables? Easy peasy. No internal payable. No internal payable. So you simply write there 3200 plus 655. 3200 plus 655. So payable. I can just wrap this because my space is not that nice. Not that nice. So I can come and write here payable. So payables, how much do we have at the end of the day? Payable, we have here 3200 plus 655. 3200 plus 655. How much do we have at the end of the day for payables? So for payables, we have 3855. 3855. And then lastly, ladies and gentlemen, we happen to be having our current tax. So we happen to be having our current tax. So our current tax, you are simply adding the two, free marks there. So you're adding the two. So current tax, what do we have over here, ladies and gentlemen? Current taxation. So current tax, we have here 1345 plus 360. 1345 plus 360. 1345 plus 360. What figure do we have at the end of the day here? What figure do we have at the end of the day here? 1705. And that is it. Not unless we have forgotten something, then you should be able to come and add everything here to give us total equity and liabilities. Total equity and liabilities. Not unless you have forgotten something along the way, this figure should be able to balance with what we got under total assets. So you take everything here, from here, like that. Yeah, you add. I'm being given a figure of 633. 633.6. So is this balancing with our total assets, or is there something we left out? Is it balancing? Is it balancing? Yes, I'm being told it's balancing, which is really, really good of you, great people. Really, really good of you. Very good. Very, very good. So have you been able to get some experience out of whatever you have done today? Some good experience out of what you have done today? Yeah, great. But what are we learning, ladies and gentlemen? What are we learning, ladies and gentlemen, here? Great. What you're learning here is that if you dare to do this group retained earnings area, you'll take 1.5 hours. You can see I've taken about 1 hour, 20 minutes. Yeah, I can't get 0. Never. Actually, you get so many marks without even knowing what you are doing. So then in my next class, I don't know when we are meeting again. I don't know whether it's today at 1 p.m. I haven't yet mastered that timetable. Now I'm going to concentrate with cash flow for FR students. Yeah, for AFR students, I'm going to concentrate with this concept of piecemeal acquisition. Someone told me, Mwalimu, this piecemeal acquisition will come. I don't know. Otherwise, thank you very much. Yeah, thank you. Yeah, you will pass it, yes. Amen. You will pass it, yeah. You'll pass it. You'll pass this paper very, very well. Yeah. So great. Otherwise, thank you very much. I'll be able to upload this on the learning management system. Yeah, immediately for the sake of the students who may have missed the session. Now, ladies and gentlemen, another